Hey folks, Vic here. I have a video to share with everyone to start the week off. In a video on June the 9th, I went over our advanced momentum trade, which is a pattern that our Coach's Corner lead coach Darko introduced to our traders quite a few years ago now. Since that video, there have been at least, about a half a dozen of those trades that have set up, and today alone there were 3 of them, which I'll show in this video. Like it's like any pattern. You never know when it's going to appear, so you always have to be watching for any pattern that you're trading. Hope you like the pattern and the video, and if so, be sure to let me know by hitting the like button, and of course subscribe to our channel by clicking the button in the bottom right corner of the video. Oh, and one more thing. Our deeply discounted summer special is still available, but it's going to be gone by the end of this month, which is June 2023. So yeah, if this kind of trading and what we do is your cup of tea, we'd love to have you join us. And the pricing for the summer special is, it's as inexpensive as it's ever been. All right, thank you so much. And here are the advanced momentum trades for you. Alrighty, let's go through these trades. And these are all from today, which is June the 19th, 2023, as I'm recording this. Swiss yen. So if you look at this trade, this advanced momentum trade is, like it says, it's momentum. You want to trade the momentum of the higher time frames and use smaller time frames to buy little dips in that uptrend. And it's a pretty easy concept. Makes sense, right? I mean, if you look at this trade, I won't go through all these on every pair, but I mean, this is the monthly chart. That thing's heading up like hard, right? No doubt about that. What's the weekly chart doing right here? It's the same thing. It's just making higher highs and higher lows. Look at this big, huge week last week. And then on the daily chart, look at this higher highs, higher lows, going up, up, up. So, and by the way, these lines that are on here, these are old lines that have been breached, like old potential resistance lines where this thing might stop going up. That got breached, price just plowed right through it. So on our entry time frame, so for a day trade, we're really using the daily chart and then a 1 hour chart for entry, but we're referencing the weekly chart. Okay, and if the monthly chart lines up, so much the better. But basically the daily chart and using an hourly chart to entry with reference to the higher time frame weekly chart. And on this daily chart, the hourly chart, you can see it's the same story. I mean, up and up and up. And the advanced market flow on all these time frames is up as well. Advanced market flow, by the way, is something that's a concept that Darko introduced to our Coach's Corner members, years ago. And really, really cool way to read price. I tell you how to read trend without using anything except pure price action. This level right here is a very important level. It's called the advanced pullback. And as price rallied up into here, this is all kind of just chop. But what you want to do is keep buying dips. Like when it goes up, buy a dip. When it goes up, buy a dip. Sometimes it doesn't dip far enough for the way that we like to buy it. There's a couple places you can look to buy. You can go for the shallower retracement where you have a better chance of getting filled most times, or you can go for the deeper retracement, which gives you much smaller pip risk. Okay, and that means that if you have a small pip risk, your reward risk can happen really, really quickly and quite substantially. There's no right or wrong answer. Like if you go for this one here, you'll get filled more often. If you go for a lower entry, you may miss the fill. It may stop here and just keep going straight up. Well, it didn't happen in either case. Buying here, this needed a 40 pip risk because our stop goes below this, what we call the advanced pullback in here, which is a really important level. And of course, it never got, and that price didn't even come close to it. Buying here, it did rally up with a 40 pip risk even. It rallied up more than a 1-to-1 reward risk. Notice how it kind of started stalling at the tops here in here. So that was great. And then buying it down here, you only needed a 25 pip risk instead of a 40 pip risk. So that means you can trade a lot more lots and yet keep the same account risk, which is pretty nice. That means you can build your account faster. Again, though, you may miss the trade, and you have to be okay with that. So a 25 pip risk, and it's made more than 1-to-1. It's still going. And the thing about these trades, because you're trading in alignment with the higher time frame, these are the kind of ones that you might want to let run for a little bit, because you don't have to be so paranoid about them going against you like you would if it was counter trend. Let's go on to the New Zealand. These are all from today, right? So this is June the 19th, 2023. Here's the New Zealand yen pair. The monthly's up, the weekly's up, the daily's up, right? Here's our daily chart. Any doubt about that? Higher, it's just like taking out everything. And even in here, by the way, I should just point that out. even in here, the trend never changed, even though we had a little bit of a lower low, but the way that advanced market flow reads and the way that we, bearish rotations read, this didn't happen, and it just kept going up. So it's still bullish all the way here. So what do? Go to our entry time frame, higher highs, higher lows. Another advanced pullback. Price rallies, comes back, and you could have bought here or here. Like I say, these are the two options that we have, and there's no right or wrong answer, but just you have to decide which one you're most comfortable with and go with it. Buying it at this level here, it needed a 38 pip risk. Buying it a little bit lower, it only needed a 23 pip risk. This one with the 38 pip risk made a 1-to-1, and buying it deeper at this next level down here made more than a 2-to-1. And then in both cases, they've come all the way back to your entry, but never below here yet. So you can still elect to keep some risk in the trade, and see if you can ride it further up. Okay, that's all about trade management, and that's a whole different subject because everybody does that a bit differently. U.S. Canadian dollar pair. Look what happened last week. This is the end of the week. How closed below all this stuff here. Okay, this is starting to look negative now, pulling back on the daily chart. Nothing positive about this. Look at straight down, closed below all these lows down here last week. This is last Friday right here. Right there is last Friday. Negative, right? On the entry time frame, what do we got? We have, see that? Lower lows, lower highs, lower lows, and now we have a potential to sell as it's coming up, and we got the fill was here or here. Now, again, it's your choice. I mean, in these cases, you're seeing that it went to the 79%, which is a higher level here, but that doesn't always happen that way. Quite often, it'll stop right here and just go down. So in any event, selling it here, higher high stop. And, in the first case, selling it here is a 28 pip risk. Higher up, you only need an 18 pip risk. This first one made a 1-to-1 reward risk. The second one, selling it up here, made over 2.5-to-1 as it came down. It retested the low of the day right here just by the wick. It was quite amazing. And so those are your kind of options. So the whole idea with, behind these trades is to trade with the momentum of the market. Okay, in particular, the higher time frames, and the advanced momentum trade is a very nice, efficient way to do that. So I hope that was informative. Again, please hit the like button if it was, and let me know what you like or you don't like about this kind of a trade setup. Okay, because I get it that not every pattern is for everyone, so I'd love to hear from you. And finally, just a reminder that our webinar special is ending at the end of this month, so we hope you'll take advantage of it. And if you have any questions or concerns, just let me know. Send me an email, and I'd be happy to get back to you. Thanks so much for watching, everyone. Take care.